Hello, and a very warm welcome to the Al-Attiyah Foundation podcast. My name is Stephen Cole, and today I'm delighted to be joined by Luyue Tan to our podcast series. Ms. Tan is a carbon market specialist at the London Stock Exchange Group with a focus on analysing carbon markets, particularly the European Union emission trading system and the UK's trading systems. Her expertise covers price developments, market dynamics, and forecasting trends in the carbon trading market, such as the European Union and UK allowances for emissions. She also examines the dynamics of China's carbon markets, including the Chinese National Emission Trading Scheme and voluntary offset markets, providing insights into price movements and market conditions along with emerging markets. So, Ms. Tan, a very warm welcome to this Al-Attiyah Foundation podcast.
Thank you so much, Stefan. Really great pleasure to be here and join the discussions of the carbon markets and carbon pricing and its role to the decarbonization.
Let's start this podcast with the big questions, and what are carbon markets and how do they relate to carbon dioxide emissions and combating climate change?
Thank you. That's a fantastic question. Let's begin with the definition. I would really prefer the UNEP one, saying carbon markets are carbon pricing mechanisms that enable governments and non-state actors to trade greenhouse gas emission credits. Most importantly, the aim is to achieve climate targets and implement climate actions cost effectively. Well, to further explain a bit, putting a price on carbon is generally seen as a market-based strategy to lower the greenhouse gas emissions and incentivize decarbonization at the lowest economic cost. And I could see there has been growing consensus about both governments related to the most important regulatory markets or the compliance market and businesses for their carbon portfolio management on the transition to a decarbonized economy. Well, another thing to note, maybe, I think, to broaden the discussion is given the size and urgency of the climate change challenges, a full range of carbon pricing approach will be required. And alongside the supporting policies of regulation, as I mentioned, carbon pricing. So I think today's focus, or my focus, is more about ETS, emissions trading scheme, the compliance market, which are direct carbon pricing instruments, along with the carbon taxes, carbon crediting mechanisms, but also there are other types of offset mechanisms like or even result-based climate finance and so on that makes the picture full for the decarbonization.
And what role do carbon markets play in giving incentives to businesses and industries to reduce their carbon footprint?
That's a fantastic question. So designed from the carbon market side, taking the cap and trade or the ETS from a governmental side as an example, it creates both carrots and sticks. Yeah, I think that's the broadened topic, like when you're more clear or higher energy efficient in production, that will reward you with allowances that you can sell in the market while punishing the polluting companies, making them to buy the allowances of the market and making a cap and trade. Other terms, I think theoretically, there has been from the economic side, you would think of the cost of the fossil fuels should be higher than the cleaner energy, like the renewables one in the market design. And also talking about voluntary carbon markets. I am not really the expert in this, but we do watch the price of these. They're more project-based, and some of the jurisdictions might agree, like compliance markets such as the China National ETS, to use some offset credits like the China CCER scheme, or some of the pilots to use the offset credits domestically, which links both the compliance and voluntary markets, and companies are more incentivized to invest in these projects like forestry, or renewable energy, or or even like the more nature-based solutions to make itself more carbon neutral, or getting the world in a better place with selling these credits and making a long-term investment.
Okay, so tell us more about how the European Emission Trading System, or EU ETS, actually functions.
Yeah, so the EU ETS is the oldest and largest emission trading system in terms of revenue in the world. And as I mentioned, it is a standard example of the carbon markets around the world, or a benchmark. So it's designed was a cap and trade system, and was a very strong legal basis was the under the European climate law, the Green Deal, and also the other climate policies, such as under the Fit for 55. And to further illustrate that, currently the EU ETS has the target of the 62% of emissions reductions. Um, yeah, which
That's a high
is
figure.
a top-down approach for the 2030, and also even higher ambitious target for the 2040 emissions reduction, which is currently under debate, which is the 90% emission. And I see actually quite interesting news every day, like the different authority mentioning whether these targets will be delayed or not. Like commission confirms delay and still due by March, or I don't know, climate chief confirms
Yeah,
that
there
it's
are
going.
going to be a lot of conferences until that figure of 90% is reached. In the European Union, how much does it cost to emit carbon dioxide? And would the price drive fossil fuel users to perhaps install carbon capture and storage facilities, or introduce energy efficiency measures?
Yeah, exactly. Just recall I forgot to mention the scope, the beginning of the EU ETS. So the European Union covers both the 27 European countries, Norway, Iceland, Liechtenstein, and also is linked to the Swiss ETS. So it's actually a cornerstone of the EU climate policy, and um, and uh, and the price is quite volatile. So we are currently at the phase 4 of the EU ETS. Um, if we watch the price as of today, which we do, like watch the real time price, um, for the benchmark contract, which is the December EUA contract. Now we're watching the 2025. As of now, the traded price is 70.78 euros, so it's something like 71 euros per ton. But I mean, we have reached the high point in recent years, crossing the 100 mark. But we see very lower price actually in the beginning of the phases, such as phase 2, when we have some market design issues in between supply and demand for the fundamentals that reached even as low as zero. But we're on the way. I mean, looking at the economic factors, we do believe this price is not high enough for the incentivizing
Oh,
the shift.
interesting. You don't think it's high enough to offer the incentives?
Well, one thing for sure, I mean, EU is very ambitious, as we mentioned, and as the the giants of the design of the climate or the carbon markets, like the Stern, which he has estimated the range to reach Paris Agreement targets by 2030 should be at least between 50 to $100 per ton globally. That was some years ago, I recall. And one thing for sure is we don't have an integrated carbon price. To give you some data, I mean, now we're in 2025, and the largest ETS and prices of the ETS in the world is quite um, fragmented, I would say, if we compared with EU. Looking at the picture of the UK ETS, I mean, this was once part of the EU, but is lower at a spread. So we got the numbers like for last year in our carbon market year in review 2024, the range of the price was in between 40 to 80 something euros per ton. But now we're actually much lower, and for other jurisdictions like the US, even, or the APAC markets, we're not reaching even like some didn't reach even 10 euros or so. So I must say, we need much higher carbon price for the ambition.
What is the Chinese carbon trading system?
Yeah, that's a really big question. So the Chinese carbon emission trading system, I would say it is jointly combined of two main parts. One is compliance market, the other part is voluntary market. The compliance market also divide into pilot ETS, which was operational now, but also started since 2013, including 8 pilots like Beijing, Shanghai, Hubei, and such, which provided good foundation for the national ETS, which is the largest ETS in terms of covered emissions in the world. That is launched by July 21st, 2021. And these compliance markets are like running in parallel, covering different sectors of the market. So the national ETS currently covers power sector, aluminum, cement, iron, and steel as of now. But the pilot markets cover more varied sector further than this, such as aviation, shipping, and such, of the highest emitting sectors ranked in the region. The national ETS is very ambitious and was supposed to expand into 8 sectors in total in the end. But we're still waiting for the policy release of the next sectorial expansion. And also, I would love to mention something really special about the China markets is the voluntary markets, or I wouldn't call it this way because it's actually linked to the compliance market. The Chinese Certified Emission Reduction (CCER) um, was similar to such, or has learned from the Clean Development Mechanism time CERs, some sort of heritage. But it was paused in 2017 for several reasons, and we saw exciting launch and actually the first patch of the new volumes trading in the beginning of this year. Actually, the during the 2 sessions, Chinese time, February. uh,
Right.
yeah, and also I would love to mention these Chinese certified credits can also be used in compliance at a top limit of 5% of the allowances So one CCER is equals one CEAs for the national ETS. And for the regional market, there are more varied like domestic offset credits, such as the Beijing pilots have some parking CERs for incentivizing the reduction of vehicles and parking, and also some like the Guangdong province have some interesting methodologies of the closing and stuff. So it's actually incentivizing bottom up for the people in China to participate into the reduction of the emissions. And a lot of these local offsets are used in like the neutrality of conferences and also companies offsets or so such as um, the their own usage. Oh, maybe we could cut this part. Yeah.
Well, that again is a wonderfully comprehensive answer, especially compliance and voluntary markets. But could you just briefly describe what carbon offset credits are and how they are traded?
Yeah, that's actually a very good question. So the offset credits in from the definition side is from the voluntary carbon markets to drive the corporate net zero or carbon neutrality goals, and from the definition from the UNEP, in voluntary carbon markets, participants are under no formal obligation to achieve the specific targets, but these credits are designed under the baseline of the different projects and different methodologies in different forms that could be used into the no net zero or carbon neutral goals.
Right.
But they don't, I mean, from the name, it's no fines for non-compliance in many cases that the compliance can be defined. So it's not enforceable in a way. And for that, I would also provide some data on the price of the voluntary carbon market as stated in our 2024 year in review report. Um,
I see.
so yeah, a big part of the voluntary carbon market development challenges is the buyer side. So there has been a strong pivot towards quality and buyer demand for carbon removal types credits, which is quite positive. However, the market liquidity and uncertainty of the development has caused some investment hesitations and doubts on the green premium or the greenwashing side of these credits because as I mentioned it's not governmental or like regulatory markets, so it's actually more onto the big ones, for example, like uh nonprofits, Vera or Gold Standard has most some of the methodologies globally, and also we see the positive strides for the ICVCM approvals for the standards and methodologies was the UN's Article 6. So for that part of the international cooperation, um, of the Article 6 side, we see the different countries' bilateral agreements on these purchasing of the credits for the NDCs, which is quite optimistic.
That's good news. Do the various prices of carbon correspond to the prices of fossil fuels? And is there a link? And can you forecast the price of carbon from the forecast prices of fossil fuels?
So in terms of the carbon markets, of the regulated markets like the EU ETS, I would say yes. So because the EU has a very liberalized energy markets, and we could see how the carbon price dynamics uh, could have been interlinked, or we say the cross commodities play. Theoretically, in the design of the EU ETS or the carbon price, there is um, there is a fuel switching price, which is in between the alter fuel choices of the in between the coal and gas, so-called the clean dark spread and clean spark spread, that could alter and be impacting the carbon price with the inflated energy costs. In a longer term, I believe like what the carbon markets price is aiming to go through is surpassing the traditional marginal abatement cost price and give systematic shifts away from the fossil fuels by making the carbon intensive assets like unprofitable. So what we see though now is the since last year the geopolitics turmoil of the volatile TTF gas has been become more giving the lever or giving the direction for the EUA price movements. For one thing, that is because uh, the investors in the gas markets um, has been very active in the EUA's trading, as well as we see in the commitment of traders' data from the financial investment position change. Um, this has like enhanced the correlation in between gas and carbon prices. Sometimes we see the correlation as high as 99% or so. Uh, yeah, but on the other side, we're also the market is in search of direction and questioning whether this was changed in a longer term. One thing is, as we've seen in the case of the UK ETS, as UK has phased out coal last year, and whether we're adding into the coal phase out procedure of the EU, and how these fundamental dynamics would change in the fuel switching effects or in the merit order of the power curve, and also how the U.S. gas potential supply would be injected into the market and cause the uh, steep steep decrease of the gas that the investors would balance in between these indirect externalities.
You mentioned, Luyue, greenwashing. How can governments and international organizations ensure the transparency and integrity of carbon markets to prevent greenwashing and carbon leakage?
That is a really hard question. So theoretically, we need very clear policy and standards. So for the EU side, there is a carbon border adjustment mechanism, CBAM, which was initially designed for this, which is a complementary policy to the EU ETS, the compliance market side. The theory is when the exported products coming into the EU will be charged a carbon levy that would incentivize or protect the clean or the low carbon the low carbon products inside the EU compared with other countries such as China or the Asia Pacific countries specifically. in the hard to abate sectors like metals, iron and steel, um, aluminum, cement, or such. And also, we see UK also in last year design a similar mechanism called the UK CBAM, which has passed through the consulting phase, and we're awaiting for the final release of the government. So we see like different jurisdictions are using these policies to regulate the market or as a benchmark. However, also the US has a carbon border adjustment mechanism design earlier on, but we do not see the direct implementation or impacts as such, as we do not focus on this. But even more jurisdictions were thinking either two things, which I do not think is really helpful for the greenwashing or the decarbonization. One is we were going back to the climate clubs talks again, and more jurisdictions just drawing the border of these carbon mechanisms, like this carbon levies, which is stopping the uh, which making the picture more complicated, and more companies are just learning the rules of reporting at this phase. And even for the EU side, we see the economic pressure and the the regulation has been slower than expected, or as we see, there has been simplification of the omnibus package for these small product exporters. But even for the big, or the 99% of the products that are exported, there need to be clear rules. Another thing is uh, there had the greenwashing definition. The border adjustment mechanisms, or even uh, the rules of the voluntary carbon markets, like the ICVCM. Well, this is only personal. They're not quick enough to solve the issue of the integrity, because as I see, mostly the developments was Trump exiting exiting the Paris Agreement, and the changes of more countries are turning into more security, energy security considerations. Climate is not at the forefront, or at the top task uh, at the agenda. And tariffs, I mean, there has been a very good discussion that I see recently saying tariffs speed the replacement of the green premium with the security premium. An interesting example was France. So France has one of the lowest carbon footprints in the world, but it didn't reach there because leaders want to save climate, but they wanted energy independence. So these greenwashing or the carbon and energy discussions, I think, will be ongoing, and no really good answers, just like the ETS, which we do not have a one size fit all answer for each countries, but we're just paving the way for the decarbonization. And some are arguing we should move past the Paris Agreement and give a new solution to this. So it's really hard to define how green we should be to begin, and then how we do greenwashing to give confidence to the market. And maybe this is a little bit off the topic, but I think one example of China is a really innovative maybe idea in my thoughts for the uh, decarbonization, like bottom up. Because, for example, China has the dual carbon goals. Though it is for the carbon markets, I think different jurisdictions have different rules. So as for China, the carbon market serves more as a diplomatic tool rather than the EU, which is more like a finance tool to
Yeah.
support the industry. Yeah, but as you see, the price of the China emissions didn't, or even the voluntary credits didn't reach as high as the EU, but you have seen the really good, effective actions. If you for the decarbonization, not talking about the 1+N frameworks for the different provincial
Right.
as a large China, but also like if you go to the parks of China, you'll see the education of how to calculate a carbon footprint of the different materials
Yeah.
and usage and life, and how we can reach carbon neutral as a collective effort. So I would say, despite of the big discussions we have these
Right.
years, for getting what is green or what is not, we should really move. And that
Okay.
needs a very top down also like signal from the policy side. I mean the
I
EU is
understand.
really different from China because it's more how do you say, freedom of speech, or you get more democracy. But I mean it really should be uh like getting down like the theory of the decarbonization step by step down and
Right. Well,
implementing from different sectors of
that's
energy.
superb. Luyue Tan, that was my last question. So many, many thanks for giving us your expertise on how the carbon markets work. It's been fascinating to learn more about such an important market. And thank you to the listeners for tuning in. A new Al-Attiyah Foundation podcast will be released in the coming weeks on our website and social media channels. But for now, from me, Stephen Cole, and Luyue Tan, it's goodbye.